Holy Houston, we have a problem. The stock market is showing some very serious signs of a potential massive breakdown, and that's exactly what I want to explain in this video. First of all, I want to get into my personal 0 DTE options trade of the day, but then I want to get into not only why is the market currently getting hit by a wave of bearishness, but I really want to dive into the key levels I'll personally be paying attention to see if I can make some money off of the whole entire situation. And obviously, given the time of the day and the part of the week that it is, I want to give you a quick breakdown of all the major things to pay attention to between now and the remainder of the week so you don't get caught off guard by any of the surprise events. But very quickly, before we get into all of that, if you enjoyed this type of content, don't forget to subscribe, don't forget to hit the like button, and with that being said, let's rock. By the time the casino closed today, Monday, April the 15th, the S&P 500 and NASDAQ closed 1% lower as yield jumped. Traders weight Israel response to Iran. Obviously, those global tensions not helping with the situation, but just add a little bit of color to the situation. Look at this. This is the heat map of the S&P 500, and boy, was it bloody red. An absolute vomit fest. In fact, check this out. The SPY down 1.2%. The Qs down 1.6%. You have Bitcoin down 3%. The only thing green on my watch list happened to be a little bit of gold, a little bit of oil, and Goldman Sachs because they had a pretty good earnings. But other than that, it was disastrous. Now, that being said, if you were on the right side of it, you got some good money. Daily DGen report. You can sign up for this for free and get it to your email inbox every single day. But for me, I ended up making $1,150 before fees and commissions and all that good stuff. And here's the very quick TLDR on how I did it. At 10:15, Piper told me to be bearish with a 3 out of 5 confidence, and Piper, my trading system, recommended some call credit spreads, selling the 517 on the SPY, selling the 444 on the Qs. And obviously, if you look at how disastrous today was, that printed, and that printed pretty well. If you look at the 10-minute chart here, basically around 10, we started to vomit. Piper fired a little bit later, right around here, 10:15, right in between these two bars. And that's when I sold some SPX credit spreads myself, call credit spreads to be specific, and then I wrote it down and ended up taking profits. And just because in this world of gurus and furus in trading, I just wanted to be very transparent and open about my own trades. I fired off at 10:21, sold 20 SPX call credit spreads for 75 cents each, took half the profits at 20, the other half at 15, was in the trade for about 2 hours exactly. So to make just over $1,000 after 2 hours of work, that's not a bad day at all. Hey, that's actually a phenomenal day in the office. So if you want to learn more about advanced options trading strategies, what is the Piper system, call credit spreads, put credit spreads, what's going on, how do you do this type of advanced 0 DT option trading, that's exactly what the Discord is for. You could trade with me, other phenomenal traders, get private lectures, all that good stuff for 100% free. Just sign up. It's in the description below. Make sure you use the code Goonie because that's the free access code, just so everyone knows. But I digress. Let's talk about why the market got completely destroyed today. The answer, unfortunately, is multifaceted. The number one thing is over the weekend, global tensions clearly boiled over. Iran's attack on Israel sparks race to avert a full-blown war. Obviously, when there's global conflict like that, it brings about a certain amount of uncertainty, and markets hate uncertainty. Breaking: Israel to retaliate in response to Iran's attack within the next 24 to 48 hours. The only issue with that was this was posted 24 hours ago. So at the time that I'm filming this, there's only 24 hours left. So that is no bueno, mi amigo. And in fact, I believe Israel directly said that their response would be clear and concise, a little bit of an ominous vibe, if you ask me. Just in, the Israeli Air Force has completed its preparation for an imminent attack against Iran. That came out about 2 p.m. Eastern today, Monday, April the 15th. So it sounds like maybe as we're all sleeping in the US in the overnight session, things could get a little bit crazy. So obviously that's part of the bearishness. No one knows what's going to happen. No one knows about the severity. No one knows who's going to be involved, who isn't going to be involved. So there's a lot of questions there. And this is all now on the backdrop of the fact that we got some very bad inflation reports, which are suggestive of the fact that the Fed will keep rates higher for longer. Fed hiking rates to 6.5% is a quote-unquote real risk for UBS strategists, according to them. Now, once again, these analysts, they're as right as they often are wrong. Let me put it this way. You know as well as I do that every time we go to the grocery store, every time you fill up your gas tank, anytime you're making a rent payment, an insurance payment, a mortgage payment, everything is incredibly more expensive. And if you didn't know that, it's just because you're not paying any of your bills, which in itself is also problematic. But right now, things are bad. Inflation is horrendous, and the Fed is being forced to battle inflation by keeping the Fed fund rate very high. They're trying to really stop demand, because if you bring down demand, that's one blunt tool, if you will, to fight inflation. That's what's going on. And at the beginning of the year, people thought we were on a good enough trajectory that we would have a plentiful amount of Fed rate cuts this year. But now that the fact that inflation's proven to be sticky, i.e. not coming down, well, that's lessening the chance of the Fed fund rate being cut, which means that they're not going to be so accommodative. They're not going to be the charismatic party guy when it comes to monetary policy, when it comes to the money in existence. They're not doing quantitative easing. In fact, they're doing the exact opposite, quantitative tightening. And it looks like we are going to be sticking that way for quite a while. Now, obviously, this is one big overall issue, a big issue in terms of the economy and thus the stock market. You pepper in a little bit of global tensions blowing over. That's not so good. And obviously, don't forget that we're in an election year, so we have a lot of drama going on there. Trump trial starts with judge allowing jury to hear about affair. Donald Trump is set to become the first former president ever to face trial on felony charges. Trump is accused in New York Supreme Court of falsifying business records as part of a scheme to conceal hush money payment to the P-star Stormy Daniels. Manhattan District Attorney Alvin Bragg accused Trump of using a quote-unquote catch and kill tactic to hide negative information about him from voters ahead of the 2016 presidential election. It's this last part that literally makes me chuckle, the whole catch and kill concept. If you think that not all politicians, I'm not talking about just right-leaning, I'm not talking about just left-leaning, I'm talking about all politicians, all people in power, and all people with serious money, that's what they do. No one wants the negative publicity out there. So to act as if this is some sort of new novel management of your own reputation of get the bad stories, buy them off and kill them so no one knows. That's how this game is played. Now, you might agree with that or don't agree with that, but literally everyone in positions of political power, overall power, money, influence, that's how these people play. So maybe there's other aspects of this story that I don't quite understand, but that part of acting like it's a big deal, that it's a catch and kill, bro, grow up. Come on. The other person who thinks that this is a little bit silly is Elon Musk. Vivek Ramaswamy, he made a video about it, he made a post about it, and then Elon on X responded, "This case is obviously a corruption of law, aka lawfare." So we kind of see which side Elon is currently leaning. And the final thing, just to wrap up, just because it's major news related to Trump and his stock DJT, Trump media shares plunged more than 15% after company files to issue additional DJT stock. Basically, when you issue millions more, it's dilution. So with an increased supply and the same demand, what do you think happens to price? It goes down, obviously raising money. Now, to take a very quick step back and look at the bigger picture for this particular week, we got to talk about retail sales, which came out at 8:30 a.m. ET, an hour before the market opened today, and it came in hot and high. Retail sales jumped 0.7% in March, much higher than expected. Retail sales were expected to come in at 0.4, came in at 0.7. And if you look at core month over month, it was expected to be 0.5, came in at 1.1. So, okay, retail, obviously strong. And this is on the backdrop of last week. The CPI report came in hot. The PPI report came in cool. Now, with this week, everyone's like, all right, what's actually happening with the newest inflation reports? And ideally, we're going to be getting a better idea from the chairman of the Fed, the guy who's in control of our money supply, tomorrow, Tuesday, April 16th. Fed Chair Powell will be speaking at 1:15 p.m. ET. Mark your calendar, set an alarm, do whatever you need to, but I will be streaming this event because I think it's going to be an important one. And also, don't forget that we're now officially in earnings season. Obviously, to kick off the day, we heard from Goldman Sachs on the back of other big financial players from last week. We heard from JP Morgan, Morgan Stanley, We heard from Wells Fargo. We heard from Citi. Obviously, all the big financial players, they really get the ball rolling. So I'm going to review Goldman Sachs with all of you. But just so you know, for the remainder of this week, Bank of America, United Health Group, Johnson & Johnson, United Interactive Brokers, ASML, TSMC, Netflix, American Express, P&G. Feel free to screenshot this. Feel free to just check it out at eWhispers. But we're getting going with all the big financial players. And then starting next week is when we have about 2.5 weeks of the serious big tech players that I know a lot of you care about. So anyway, back to Goldman Sachs. As I alluded to at the start of this video, it was one of the few green stocks of the day. Goldman Sachs tops first quarter estimates fueled by trading and investment banking. Goldman Sachs today, Monday, posted a first quarter profit and revenue that topped expectations, fueled by a surge in trading and investment banking. The bank said its profit jumped 28% from the year earlier period, thanks to a rebound in capital market activities. One player doing pretty well, and even on a disastrous red day in the overall market, as you can see here, Goldman Sachs ended the day up 2.9%. So even though it gapped up larger and pushed higher, it came back down. So it was a red day, but overall, relative to the close from last week, a pretty green, solid day. Other important news, not necessarily in earnings, but I need to put this on your radar. We got some big breaking news related to Tesla and thus Elon. Tesla will lay off more than 10% of the global workforce. Read the Elon Musk memo. As we prepare the company for a next phase of growth, it is extremely important to look at every aspect of the company for cost reductions and increasing productivity. Basically, he's getting rid of redundancies. He's getting rid of replica jobs, and you have to do that when things are struggling. If you're watching this, there's a good chance you've been paying attention to the stock market. I don't need to tell you that the EV sector has been under some serious pressure, so it makes sense that they're doing some cost-cutting measures, which is exactly what's been going on in the entire global workforce over the past 2 years, especially within the realm of tech. Tesla executive Baglino leaves as Musk loses another top deputy. You know the saying, when it rains, it pours. When you announce to the world you have to lay off people, it also happens to be intertwined with news that you're losing some of your top executives, and obviously that doesn't add up to anything positive with the stock. Right now, Tesla on the edge, the razor's edge of a clear technical breakdown at 160. If 160 doesn't hold, if the bulls don't come in at this line, we'll call it the Alamo, the last stand, then I'm looking for it to fall all the way to 152. Crazy stuff. And just because we're doing the charts and the breakdown, I do want to point out probably the most impactful point of this entire video, the overall market. On your screen right now is the SPY, the ETF tracking the S&P 500. And as you can see, it's been a pretty easy trip to the upside ever since late October, early November of 23. Higher highs, higher lows, that sure but steady slow grind to the upside. Well, today something happened that hasn't happened in quite a while. The market broke down below the 48 EMA, closed below the 48 EMA, and as I said at the very start of this video, this is your major warning sign that the market is officially switching from a bullish trend to a bearish trend. I'm not saying we're in a bearish market, but I'm saying these lower highs and lower lows are very evident, and they're obviously the exact opposite of what we've been experiencing over the past 3-ish months. Now, could this be a fake out breakdown? Of course it could be. Of course, anything could happen. But if this price line of about 508 isn't quickly recaptured, I would be looking for a sell-off, a bleed-off, a continuation, a capitulation down to this downside gap fill of 497.37. So I'm putting it out there that if this does not quickly rebound, my next price target would be right there, which happens to be the downside gap fill from Wednesday, February 21st. Mark it, because I think the odds of that getting filled relatively soon are pretty high. And last but not least, don't forget to sign up for the Goonie newsletter. This is 100% free. You can get it to your email inbox every single weekend. I break down what happened the last week, what I'm looking forward to in the upcoming week, all the major macroeconomic events. So for example, Tuesday, April 16th, I hope you're watching this in time. Housing starts, building permits, Fed Chair Powell speaks at 1:15. All the other ones for the remainder of the week. I let you know what's going on with earnings, and then I kind of highlight the ones that I think you might care most about, but I also give you the seasonality. So Tuesday, April 16th, over the past 2.5 decades, this day, based on the equity curve of buying at open, selling at close on this specific day, has greatly greatly favored the bulls, so keep that in mind. And then obviously I give you the other days of the week, and I give you an update on how Piper has been doing recently. That's what I have for you in this one. The market showing some serious warning signs that we might be going from a bullish trend to bearish trend. I wouldn't be surprised if it takes a little bit, if at first there's a fake out, but then the fake out itself is another fake out. We know Tuesday's really bullish. So in the short term, I'm looking for choppiness, and in more of the medium term, I'm looking for that play to the downside gap fill just below 500 buckaroos. That's what I have for you. I hope you enjoyed it. Let me know if you have any questions, comments, or concerns in a comment below. That's what I have for you. Catch you in the next one.